Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We have you on the main channel and we have you on the extra channel this morning because we are covering two earnings at the same time. On the main channel, we are covering Plug Power this morning, and on the extra channel, we are covering Shopify. These are requests from you, the members. If you are a member of my channel and you do a super thanks on a video or when I'm off air, just doing a normal normal videos, or you request it during a live show, we can do your earnings. We can do 4 earnings a day. And not only do you get the earnings, but you also get the promotional videos. Remember, I'm not here to pump and dump stock. I only own the S&P. However, we do rank number 1 for most of the stocks that we cover, and that is increasing. Now we're getting ranked on Google as well. It really is making a huge difference to drawing attention to your favorite stocks. So if you want your stocks highlighted and you want earnings covered, this is how you do it. So welcome everybody. The earnings on Plug and Shopify don't start for another 29 minutes. We like to go early. The early bird catches the worm. Other YouTubers are sitting around, messing around, having their breakfast. I'm up here, suited and booted, ready to go. Do you like the new tides this morning? Here's a top tip for you. Let me show you this. Top tip on your tie. All right, let me zoom in. If you go here, look. Can you see my tie? Look, once you've tied it, give it a pinch. Because if it's flat like that, you look like a schoolboy, give it a pinch. Gives it a bit of 3-dimension. I discovered that yesterday and I thought, you know what? That looks quite good. That's my little thing. So there you go. If you want to wear a tie like Martyn Lucas, give it a pinch. I just made it up. I've created my own trend. Anyway, there you go. So, as you can see, Plug Power is down this morning and Shopify is up 14%. Now, we are running polls on both of these. These also rank on Google as well. You might want to take part in both of these as well. So, we do have 2 polls running. I'll put them on the screen for you. Wherever you are, please tap the like button. If you're on the main channel, you are watching the front of me. If you are in the extra channel, you're watching the back of me. But either way, we're covering your earnings, which starts in 29 or 27 minutes now. Right, so smash the like button. That really, really helps. And consider subscribing. Now, remember, wherever you are, they are different channels. The main channel is not the extra channel. We have 2 different channels, so please do subscribe to both. If you want to chat in the extra channel, it's members only because it goes live 12 hours a day and we don't want bots and scammers and trolls. It's a very, very safe, really useful place because we have members only all the time, 24 hours a day, 7 days a week. It's always members only. We don't apologize for that. We do it because real investors, real traders, it's only 99 cents to be a member, but it stops all the bots, the trolls, the scammers, everybody else coming in and spoiling the effect. So that's why we are members only. I'll give you the link for that. That's how to become a member in the main channel. On the extra channel, you can look on the homepage. Here is the X account. Here's the all links button. Let me give you all the links. We've got Alpha Spread as well. If you want the software that I use, become a Discord member. You can become a Discord member, get the free training to scalp trade and all the scalp trading tips for free as part of being a member. All right, so there we go. Now, how many have we got watching? On the extra channel, we have 9. On the main channel, we have 37. So what I'm going to do, I'm going to give you both the opportunity to switch between the 2. So you can see the Shopify earnings and the Plug earnings. So here we go. First of all, I'm going to go into the main channel and I'm going to give you Shopify earnings, Shopify earnings now on extra. Whoops, a daisy. Okay, and we shall pin that to the top so you can see that there. That's pinned to the top, Shopify, And if you want plug power on the extra channel, if you want plug power, those on the extra channel, this is the plug power earnings. I'm just going to give you now plug power earnings now. Okay, there we go. We've got 25 minutes before it starts. There is the plug power earnings for you there. Now I've just realized I do have to just switch accounts to be able to pin it because it's the other account, but I'll soon fix that. I'll do that again. Plug power earnings live. Whoops. Now. Okay. Okay. I shall pin that to the top. There you go. It's pinned to the top for you, and I'll switch back to my main account as well. All right. Okay. Everybody good? All right. So we're rocking and rolling this morning. There's 10 of you over on Extra now, and there is 43 of you in the main channel. So if you've just tuned in, we are covering 2 earnings at once. It's a new service now. We're trying to improve the service for my members all the time. This is a new service. We are in season 4. We started last week, and we're always bringing more and more. If you are a member of our channel and you do a $5 super chat, you can ask me to do an earnings for you, analyze the stock, promote the stock, make videos on the stock, cover the earnings, live phone-ins, and everything for $5 by being a member. And we had 4 booked today. We are sold out today. You cannot book any more. Tomorrow it is now available. Today we have on the main channel plug power. On the extra channel we have Shopify. Tonight after hours we've done it again. Yep, sold out again. Tonight, we are Soundhound on the main channel and GeoVax on the extra channel. We are completely sold out again today. I'll put on the screen for those watching on the main channel. Tomorrow, there are many stocks to choose from, but the ones that we are going to feature, should you wish to cover any of these, are as follows. In the open, and there are many more, but these are the ones we are featuring. In the morning, we have CyberArk, CYBR, BITF, and HUT, HUT. We can do 2 of those. First person to do a super chat of $5 minimum, and we can cover those. We've also got in the after hours, Cisco, CSCO, NU, NU, DLocal, DLO, plus many more. You might have one that you want to cover. On Thursday, we have Disney in the open, JD, Intuitive Machines, that's very popular, Brookfield, Billy, BILI, and in the closing bell, we have AST Space Mobile, we have Oklo, and Amat, AMAT. So there you go. Should we just do Friday as well? Friday, we are featuring Alibaba, BABA. That's all we'll worry about for now. So if you are a member of the channel and you want to book your very own earnings with analysis and promo videos and all the rest of it, member, and then $5 minimum, and then you can book it. Right, so welcome everybody. We've got just 20 minutes to go. Please consider subscribing wherever you are. You are watching on 2 channels this morning, Extra and the main channel, wherever you are. The main channel is winning. Plug Power is more popular this morning. And Shopify is it's got just 8 viewers at the moment. So tap subscribe. And if you tap the like button, it will share this out as well, so more people will be made aware of this stream. And if we get 100 likes, we could actually get suggested on YouTube, and that would be wonderful. Right, so 21 minutes to go. Plug Power on the main channel, Shopify on the extra channel. So let's have a look. Plug Power is down 2.51 at the moment. Let me see if I can find more information. The numbers should be out now. Let's have a look, see what we've done. But the core is what it's all about. Okay, Plug, we have missed on earnings. We have missed on earnings, expected to lose 24 cents a share. In fact, we're losing 25 cents a share. Even though it's a miss, it's actually kind of overall better than expectations. We were expecting a bigger miss than this, and we are steadily moving up. So Plug Power is a miss. It is down, but a good opportunity. I think things are going in the right direction despite what's going on in the climate. If we look at Shopify, Shopify is up 15.24. Obviously, I would suggest they've beaten on earnings. Yes, they have. It's a huge beat. It was 27 cents per share estimated. It was actually 0.64. It was a huge beat, one of their best ever beats. So no surprise, Shopify is looking very well. If you want to watch the Shopify earnings, listen in to the earnings, you can go to the top of the chat. You will see my post, and it will take you to the extra channel. They both start at the same time, so you can choose which one you want, or watch both if you're clever enough. I'm doing both. See, I'm clever enough. I can do it. Why can't you? All right. Right, there you go. So let me show you Plug. There is Shopify. You can see the difference. Looking very, very good. Now then, we are going to start a campaign because a lot of people are very upset, mainly me. I am sick and tired of the world going all soft and woke and silly and nonsense. What's all this pink when we're red on Robinhood? I don't like it. I don't like it. We are stock traders, red and green, please. Can we have red and green option back? In dark mode, which is what I like to use, we no longer have the green and red option. We are now this flipping pink. I don't understand it. It's flipping horrible. I don't know what you think. There it is. If we go to what's green, it's now yellow. Crazy, right? They've kept a good version of it on the website. Look, that's still green. That's still green on the website. And if I show you a red stock, we'll look at Plug. You can see it's still red. Red and green on the website. We like red and green. Can we have red and green back, please? At the end of the day, give people the option. If you like pink and you want a pink when you're red, overdrawn, when you're down, fine. If you want that, that's fine. But we should be able to have the option. What's happened to the world? I quite like just the red and the green for my trading. Look, yellow rather than green. But for some reason, that doesn't bother me as much. But this pink one, it's like the screens are faded. It's like it's faded out. Can we have red and green, please? I'm not saying we have to have red and green and then scrap pink and yellow, but can we just have the option, please? Once again, you can have it red and green if you use the light mode, but obviously that looks horrible. That's bright white. But the option was there before, so we can bring it back as an option at least. For those of us that like the stock market to be red and green the way it's been for thousands of years, I certainly would appreciate that. So anyway, what do you think? Contact Robinhood and say, can we have at least the option? Those that want pink and yellow can have pink and yellow. But I, quite frankly, like to see the stock. It just looks childish to me. It's not professional. And I've spoken to some traders who just don't even want to use it now because it's just like, who wants to be pink when they're overdrawn? Anyway, that's just my thought. You might disagree. That's fair enough. Let me read your comments. We've got 15 minutes to go before the earnings begins. Plug on the main channel. And we're loading up now. We're starting to refresh our screens ahead of schedule. There we go. There is Plug. Plug is now in the house. That's the audio you can hear. Plug is in the house. Very, very good indeed for the main channel. Let me go and check as I slide round there. Very professional. Very professional. Slide round here. Not that professional. You go in, well, you're off, your spotlight's wrong. but I don't go over here very often. Let me refresh the screen for Shopify. Have they loaded it yet? It doesn't normally load. No, another 30 seconds. It normally loads on the 15-minute plug for some reason today. Went ahead of schedule there, but that's why we like to double check. Shopify, stand by on the main channel. I'm just over here in the shadowy areas of the extra channel, the gloomy areas of the darkest corners of the studio. Right. Okay, it should refresh in 5, 4, 3, 2, 1. Quarter past the hour, we should be able to get it. There we go. Play lobby music. Yeah. Mute it. Okay. Let me bring up the audio. Okay. There it is. We've got the music for Shopify. We are up and running for Shopify. We have the earnings for you. So we're all good. Shopify, stand by. We have your earnings ready to rock and roll. What I'm going to do is I'm going to play the audio so I can keep a tab of it, but mute it. There we go. And if I just bring the volume down a little bit, that's my monitor system. I can listen to it in the background without you having to hear it. Then I know exactly when it starts. Okay. How can I do this? I don't think I can now. All right, I was going to do something. Never mind. Right, Shopify, we're good to go. Let me come back to here for you for the main channel. We're listening in. We've got the monitor system so we can listen into the extra channel at the same time. So welcome everybody on the extra channel. Please consider subscribing to the channel and tap the like button. Everybody on the main channel, if you could do the same, that would be great. Let's have a look. We've got 7 watching on the extra, watching Shopify, and we've got 70 watching here today on the main channel with plug power. Okay, fantastic. Let's rock and roll. Plug is down at the moment. It was a slight miss, but better than it has been, so I'm okay with that. Shopify is up today, a great historic beat. So before we continue, if you are in the chat, you can see pinned to the top. Just go to the top. You can see the earnings on the other channel. So if you're on the main channel and you want to watch Shopify, the link's at the top. If you're in the extra channel and you want to watch Plug, the link is at the top. But also, very, very important, we now have a ranking poll system on our community. This is better than X, better than Facebook, better than everything else, really. It ranks on Google. Very, very new service have just started really working on this year, this season. And it's where you can get an indication of stocks. Those on the main channel can see this here. If you go to the community tab, I'm going to give it to both channels right now. There it is in the main channel. There is the community tab for us. And here in extra, here is the community tab for you as well. There you go. There is the community tab. What you see is this. You see we have polls running, nice little emojis and everything else, our little logos. And you can see what people are saying by the fact they leave comments. They can like it. They can share on their own social media. And you can see that Shopify was a 62% prediction of a beat. And as you can see, that was correct. Very, very nice indeed. These are very, very useful tools to me. They tell me what people are thinking, what's popular, what's trending. With real investors, not bots and scammers and trolls. You have to be a subscriber and a part of our family to be able to find these communities and use them. So we find they're really really useful. I say we, it's only me. I don't know why I say that. All right, scrolling down, Govix, Geovax. Sorry, that's tonight. Just 23 votes so far, but you're expecting a 52% beat. Okay, scroll down. Then we have Soundhound. Soundhound's a big one tonight on the main channel. You said 88% of you have said it's a beat tonight. You are very optimistic on that one. With 58 votes. Please leave a comment, share it, tap a like button, be part of this. This is a very useful tool for investors. I post all my earnings, all my posts here, all my polls, so we can learn what people are thinking about stocks. Now, look at this one. This one had 34 votes, and Plug Power, you said it would beat. 62% of you said it would beat. Well, it's a very slight miss, so that didn't work out. Virgin Galactic, I asked you yesterday, 94 votes. Would this pump and dump? We saw yesterday that there's news now of another dilution. I said it would pump, and institutions are pumping it just to dump it, and I was right. It's down 1.99% today, and you agreed with me. 59% of you, 94 votes. This is very important because these are very useful tools, so please take part in it. What about this one? There's a big one here we just did. Let me have a look. SMCI, no, it was, I think another one, it was Tesla. Tilray, that was a big one. No, Tesla, this is one. Yes, Tesla, 165 votes. Is Tesla going to $400? And you've said 75% of you have said yes. Very confident in that. 20% say no, and 5% say undecided. So there we go. Some very, very useful tools. Bookmark that. Well, you don't need to bookmark it. It's the channel. Just go across to the community tab, and you can take part in all of these. Very, very useful tools. Help you see what other investors are doing. It's an indicator. I'm going to ask TradingView and Seeking Alpha whether they want to include that as one of their indicators. You never know. 5 years' time, this might be the most popular way of knowing what's going on with the stock. It works better than X. It works better than Facebook. It works better than StockWits. Works better than Reddit because it's real investors, not just idiots pumping and dumping and scamming and trolls, and they can't take part in it. So it's really, really good. Anyway, let's read your comments. We've got 8 minutes to go. We've got Plug Power on the main channel. We've got Shopify on the extra channel, and we are on standby. Then we'll have the opening bell. Then we have the closing bell on the main channel. And then on the main channel tonight, we have Soundhound. And on the extra channel, we have Geovax. I want to thank those of you that did super chats on air, and super thanks off air to book these in. You can book them in if you are a member. Let's have a look. Let's read the comments. I owned this stock from 17, held to 50. Joe, wow. Hi, everyone. Here he is, our mate Mike. How are you, Mike? This morning, I get to learn a hard lesson on even a hard lesson. I should just buy VU and JEPQ. I was in between meetings and caught the stream where Martyn said, put on your big boy pants based on your contact info. I snap purchase 100 shares of Plug at $2. LOL, 195. Well, I actually think it's not that bad, actually, because the time to buy this is when it went to 170, which a couple of days ago. That was the time. But nevertheless, at the end of the day, they did miss on earnings, but very slightly, and it's improved for the last three. So still going in the right direction. Hi, all, Henrik. Good morning to you, Henrik. Hey, everyone. Mike's here. Good luck to Plug and friends. Hi, Martyn. Hey, Kevin. Lovely to see you. Good afternoon from Belgium. Lovely to have you here from Belgium. Hi, Sebastian. Hi, everyone. Truth Seeker. Kevin B is here. How are you, Kevin B? Lovely to have you here. Hi, everyone. Ernest has plugged. Power announces key strategic milestones, continued margin improvement in third quarter. Thank you for that. NVIDIA news today. NVIDIA news today. If you've got news for NVIDIA, share it on Discord, and I will make a video on it, post it, cover it, you name it. Hi, everyone. Christopher Shaw, thank you for your comment. I haven't replied to your comment yet. And the reason why I haven't replied to your comment, Christopher Shaw, about SIPs is once I do, the comment disappears. Not disappears, but it's not in my list of comments to answer. I answer all comments as they come in. I haven't answered yours because I'm speaking to my CPA and my accountant to give me best advice shortly. It might take some time. Then I'll reply to you. But I want you to know that's why, because I reply to all of the comments, all of the members. And the reason why I haven't is because of that. I'm waiting to get further information before I say anything. I don't like saying things until I've fully informed and fully know what I'm talking about. And then I say it. And then I go all in. So expect a comment from me sometime in the future. I've just left your comment there until I know more about it. But thank you for reaching out. Appreciate it very much. Christopher, good morning. Dylan, good morning. Steve Wally is here. Hi, Mike. Hope you're not in a bank holiday. Hope you had a good bank holiday and looking for adding ETF to your portfolio. Oh, yes. I only wished Mike had just gone all in on the S&P. Follow my journey. But anyway, because Mike's a mate, I don't give financial advice. But to my mate, I would say, Mike, join me on my S&P journey. Join me on my Coca-Cola, and you'll be good. But anyway, pink is my favorite color. I quite like it. Pink's nice, but I just wish we could have red and green for stocks. Simple as that, really, and at least have the choice. How was your doctor appointment? Fantastic. Another year. No spots on my body needed removing. So another year of good. My age spots haven't got any older, which is good. So I had a good year. It cost me like $60 with the copay. That's it. That's the minimum price you pay. I had nothing wrong with me at all this year. I haven't had anything frozen off yet. I've been going since Leah got me going for 4 or 5 years. Not had anything yet. On my Samsung app, the colors are green and orange. There you go. I don't think the color changing has anything to do with going woke mine. I'm just like, why does everybody want pink and everything? I mean, pink's fine. I've got a pink shirt. I've got pink ties. I like pink. I would just like to be able to have the option of red and green for my stock invested. Is that too much to ask? Is it too much to ask to be able to ask for red and green when you're investing? I don't think so. It's been like that way for a million years, and I like it. It's all larger corporations and government trying to appease certain sections of society, but in turn causing huge division. Look, if people want pink, blue, green, have any color you want. I just want red and green for stock trading. All right? Is it not 24-hour market? No, it's like that. It's like that all day. It's been like that since yesterday on the app for some reason. I've updated the app. I've checked the app. It is what it is. I've tried all the settings. On the website, you can see it's slightly different. We do have a red and green on the app. If you go in light mode, it's red and green, but we don't want light mode. We want dark mode. All I want is the option to be able to have red and green. All right, appreciate the coverage. We got 2 minutes to go. How was your doctor's appointment? Yeah, all good. Mike, all good, good, good. Any news from Jefferson Boots? No, and I shall be chasing him soon as well because it's been a while. So thank you, Rallo1. Morning all. Hi, Rallo. Hi, Nonny. Hi, Mike. Good morning, Lance Strength. Okay, 1.5 minutes to go. Here on the main channel, please tap the like button, subscribe, ring the bell. We are covering Plug Power on the extra channel. And if you want to join on the extra channel, there are links in the chat pinned to the top. On the extra channel, we are covering Shopify. Shopify, we have 16 viewers in the extra channel. Please tap the like button. If we get 100, it will share it out. We are moments away now. 1 minute to go. We've got 16 watching, 8 likes. Please, everybody on the Shopify, please make sure that you do like and as well. Like and comment, please, in the extra channel. And on the main channel, we've got 89 watching. How many likes have we got? We are down to 45 seconds. Expect a slight delay. 30 likes. Let's get 100, and we can start to get this suggested on YouTube. All right, here we go. There is the audio coming through. Okay. Now then, once we start on either channel, the other channel will be muted. So this is a little bit of a moment for me when this begins. So I'm listening to both audios at the same time. On the extra channel, if you hear plug start, okay, it'll run until Shopify starts. Once Shopify starts, I will mute myself and Shopify will take over. So stand by. It's now 7:30. Both are due to begin. We're playing audio on both. When it comes through, I will play one on both channels, and then when the other one comes through, I will mute the other one. Make sense? Okay, makes sense. Makes sense to me. Just sit back and relax. It'll all make sense to you. Right, we're listening in. Here we go.
I'm Carrie Gillard, Director of Investor Relations, and joining us today are Harley Finkelstein, Shopify's President, and Jeff Hoffmeister, our CFO. After their prepared remarks, we will open it up for your questions. We will make forward-looking statements on our call today that are based on assumptions and therefore subject to risks and uncertainties that could cause actual results to differ materially from those projected. Undue reliance should not be placed on these forward-looking statements. We undertake no obligation to update or revise these statements, except as required by law. You can read about these assumptions, risks, and uncertainties in our press release this morning, as well as in our filings with the U.S. and Canadian regulators. We'll also speak to adjusted financial measures, which are non-GAAP and not a substitute for GAAP financial measures. Reconciliations between the two are in the tables at the end of our press release. And finally, we report in U.S. dollars, so all amounts discussed today are in U.S. dollars unless otherwise indicated. With that, I will turn the call over to Harley.
Thanks, Carrie, and thank you all for joining us today. As we say each quarter, Shopify is building for the long term. Our consistent results quarter after quarter confirm that our strategy is working incredibly well. Q3 was another amazing quarter across the board. GMV was up 24%, marking our fifth consecutive quarter where GMV growth was greater than 20%. Revenue was up 26%, operating income more than doubled from last year, and free cash flow margin expanded to 19%. These are not just numbers. They reinforce that Shopify is an industry leader, delivering on both growth and margins, all while simultaneously creating and leaning into opportunities that bolster our growth. So before we dive in, let me start by saying this. If you walk away from this call with anything, it should be these three things. 1, entrepreneurship and commerce are growing, and Shopify is capturing an increasing share of this vast and expanding market. 2, Shopify is increasingly the go-to platform of choice, not just for entrepreneurship, but for all of commerce. We are well positioned for extensive growth across different merchant segments, size, geographies, channels, and products. And 3, as our merchants do better, Shopify does better. Our business model prioritizes merchant first, fueled by a high-velocity product innovation engine that makes the hard things easy and everything else possible. Now let's quickly dive into some of the key accomplishments in the quarter. Starting off with product. We build outstanding tools that work seamlessly together, creating a platform that is packed with value and, quite frankly, just works really, really well. This is why we invest so heavily in building the most integrated platform on the planet. And it's also why merchants come to Shopify and why they don't leave Shopify. We are shipping products and enhancements on a literal daily basis. So rather than give you a laundry list, I'd like to spend a few minutes now walking through some of the highlights from the quarter. First, let's talk about enhancing merchant automation. Our new features are making it easier for merchants to run their businesses more efficiently. Because let's be honest, nobody starts a business with the goal of focusing their time on sales tax compliance or inventory management. These foundational tools make the nitty-gritty stuff automatic, so merchants can focus on the reason they started a business in the first place, for the products they are selling. Let's start with Shopify Flow, a low-code workflow automation app that empowers merchants to build custom automations that help them run their businesses more efficiently. This includes a new automation trigger based on the merchant's custom data and newly completed admin API connector that provides an additional 304 new actions to use in their automations. And as a result, Flow has become a much more powerful tool, enabling merchants to update products, process customer form submissions, edit orders, and so much more. And within Shopify Inbox, this product now uses AI to suggest replies based on each merchant's unique store information, making it super easy for merchants to respond quickly and accurately to customer inquiries. In fact, on average, merchants are using the suggested replies for about half of their responses, edited or not, showing just how effective this feature has become. Replying can quickly boost conversion rates, which means more sales for our merchants, and in turn, for Shopify. And finally, within Shopify Tax, we started rolling out automated filing to eligible merchants. Merchants can now automate their preparation, filing, and remittance of their sales tax returns from within the Shopify admin. This saves time and simplifies one of the most complex parts of sales tax compliance. And as we know, taxes do not get simpler just because you cross borders. That's exactly why, in our focus to make Shopify the best way to sell globally across all channels, we saw a clear opportunity to tackle the complexities of cross-border commerce head-on. And in Q3, we successfully extended our Shopify Tax product to merchants in the UK and the entire EU. We've automated value-added tax calculations to make them more accurate. We introduced automated VAT invoices for easy compliance in cross-border commerce. And we've developed tax liability insights that track regional and national compliance. All of this ensures our merchants can focus on growing their business. Another product that continues to gain traction by helping our merchants sell globally is Managed Markets, which allows merchants to easily enter new countries and grow everywhere. For our merchants, it's proving to drive some pretty incredible results. In fact, EY recently analyzed the performance of a sample of our merchants after they adopted Managed Markets and found that 83% increased the number of countries they sold to, and of those merchants, their international sales growth after adoption was on average higher than 40%. Meanwhile, if you look at the top 100 merchants, they saw an increase of greater than 200%, which is truly incredible. Managed Markets is another example of a product that is yielding incredible results for our merchants globally. Moving to offline retail. In October, we expanded Tap to Pay across Shopify Point of Sale. Tap to Pay is now available in multiple countries, including Australia, Germany, and the Netherlands and the UK, as well as to merchants using Android devices. By utilizing the NFC chips and devices, Tap to Pay processes payments from contactless cards and digital wallets like Apple Pay via Shopify Payments. So why does this actually matter? Because it enables our merchants to create a truly delightful in-person experience for consumers, all powered by Shopify. For merchants using the Point of Sale app, we made significant functionality and usability improvements. Notably, we introduced offline payment support, which ensures uninterrupted sales even during network disruptions. We also focus on personalizing the customer experience by enabling access to customer meta fields and supporting Shopify bundles, which has seen encouraging adoption rates, especially among mid-market merchants. We also improved operational efficiency and optimized the Point of Sale app for tablet view, introducing a split-screen search view. In retail, every second in detail counts to drive sales, build customer affinity, and foster brand loyalty. And these updates, along with others like accepting unverified returns and expanding UI extension capabilities, reinforce our commitment to making in-person commerce easy and fast. At Shopify, we do more than just help merchants sell. We also ensure they have the financial tools needed to thrive. Recently, we launched our financial services suite, Shopify Finance, which is a comprehensive package that includes products like capital, balance, and bill pay, all integrated through the admin for quicker access. Each component of this suite is designed to offer unmatched financial control and efficiency, with features like higher APY and next-day payouts in balance for Shopify Plus merchants, and more flexible payment options in credit to better manage cash flow. Now, within Shopify Payments, penetration grew to 62%, and Shop Pay facilitated $17 billion in GMV, which was up 42%. Highlighting the power and the strength of our payment product, which also unlocks a key gateway for merchants to leverage our other features and products only available when on Shopify Payments, like the Shop app. And speaking of the Shop app, this quarter, the Shop app launched a new merchant-focused home feed, showcasing the diversity and the richness of brands on Shop. The experience uses new machine learning models to help buyers keep up with the brands they love and discover new brands based on their preferences. These changes have already led to early success, with an 18% increase in sessions where a buyer engaged with a recommendation. These enhancements, combined with our deep and seamless integration, helps drive higher GMV and GPV and strengthens our overall ecosystem. On the topic of machine learning, I want to give a shout out to Mikhail Parakin, our new incredible CTO, who recently joined the Shopify team. Mikhail spent over a decade at Microsoft, where he spearheaded AI advancements and products like Copilot. He also served as CTO at Yandex, where he developed multiple search engines and cloud services. Mikhail brings a wealth of experience in AI and search technologies. And in just over 2 months since he joined us, he's already made a significant impact, enhancing our products and pushing us forward. I'm convinced that with Mikhail on board, Shopify is only going to get stronger. Building on that note of strengthening our bench, let's talk about our ecosystem. We are committed to creating an ecosystem where everybody thrives, our partners, our merchants, and of course, Shopify itself. This collaborative success is by design, and as a result, we have earned the reputation as the preferred partner in the commerce world. This quarter, we became the first commerce integration partner for Roblox, which has on average over 88 million daily active users. We integrated with YouTube's shopping affiliate program, and we diversified our payments product offering through an expanded partnership with PayPal. We are increasingly close to a world where commerce flows seamlessly everywhere, and that is what we are building. It isn't just about providing tools, it's about creating an interconnected ecosystem, a system of record where businesses of all sizes can thrive. And it's working. Our go-to-market efforts, combined with our product developments, are enabling us to make incredible headway across multiple long-term growth drivers of our business: B2B, offline, and international, all of which are increasingly the on-ramps into Shopify and unlocking more opportunities for us to grow our addressable market. And we've got the results to prove it. Q3 offline GMV was up 27% year over year and has more than doubled in just the past 3 years. Q3 B2B GMV grew over 145% year over year and has now had 5 consecutive quarters of triple-digit growth. And international GMV continues to outpace the growth in North America, accelerating to greater than 30% growth in Q3, and cross-border was approximately 14% of GMV. So let's dive deeper into what's really driving our success in the offline segment. Our go-to-market efforts are really paying off, especially with large, complex, multi-location merchants. This segment saw a 50% increase in locations year over year in Q3, highlighting our really strong momentum. This quarter, established omni-channel retailers like British clothing company Orla Bar Brown, footwear store Fit to Run, and fashion retailers Akira and Billy Reid adopted our point-of-sale solution. In Canada, the legendary women's fashion retailer Laura migrated their point-of-sale systems to Shopify, bringing over 130 stores in one of our largest point-of-sale migrations yet. As we continue to power an increasing number of established multi-location brands, we also firmly believe that consumer-favorite brands of tomorrow are being built right now on Shopify. Take Thuma, for example, a modern furniture maker that has quickly grown into a very large direct-to-consumer brand on Shopify. Now, as they launched their flagship store in New York City, staying with Shopify for their offline expansion was an obvious choice. This stickiness and trust in our platform are what truly sets us apart, ensuring that as our merchants expand online, offline, and everywhere in between, they do it with Shopify. In B2B, we continue to set new records for monthly GMV highs, with September marking our largest single month ever. We are positioning ourselves to keep breaking these records, especially with new enhancements like the ones I mentioned earlier, including Shopify Flow automation templates that streamline B2B workflows and improvements to tax collection and conversion tracking. While much of our growth to date stems from our existing merchant base, in Q3, we also broke into new territories in industrial, hardware, and automotive vehicles and parts sectors that hasn't historically considered Shopify. Now they're not just considering us, they're committing to us. We are also continuing to focus on international growth, which continues to outpace North America, especially in Europe, like key countries Germany and France, where we're increasing our market share. We've made enhancements to localization, shipping, and compliance, and are pairing that with intensified marketing efforts. And it's working. In Q3, international merchants increased by 36% year over year, with top brands like watch retailer Watches of Switzerland and cosmetics company The Body Shop signing with Shopify in the quarter. Okay, so now that we've talked about product and channels, let's focus on how we're making waves up market. Q3 was an exceptional quarter in terms of new enterprise-level brands coming to Shopify. For example, this quarter we signed luxury handbag company Fashion File, jewelry designer Brilliant Earth, footwear brand Reebok, fashion apparel brand Off-White, cosmetics company Beauty Counter, and Lionsgate Entertainment, to name a few. We are also now powering some iconic apparel brands, including Hanes, MeUndies, Vera Bradley, and Bare Necessities. Our platform's composability gives large brands the flexibility to choose modular components, like On Running, who recently adopted our checkout commerce component. One of the best things about modular components is that integration can happen fast. In fact, we recently had an outdoor gear company go from handshake to full implementation in less than 3 weeks. Seriously, in under a month, we had the Shop Pay button up and running in their checkout, showcasing not only the robustness of our API, but also our team's incredible ability to make things happen faster. And the momentum does not stop there. Victoria's Secret, Joann's Stores, and Shoe Carnival are also coming soon to the Shop Pay commerce component. Further proof that this pathway to growth is really working. Enterprise brands from all verticals are making the move to Shopify. And it is clear that our platform's flexibility, speed, and value are really what sets us apart. We're constantly working to make it easier for larger, more complex companies to make the switch. Take our new data migration tool. New merchants can now import essential data like products in as little as 4 clicks. Picture this, one merchant recently brought over 44,000 SKUs to Shopify in less than 3 minutes, a task that used to take hours, if not days. This significant reduction in data migration hassle is a big deal, as it removes major friction points for merchants looking to move to Shopify. To be clear, enterprise is not a short-term play. It is a massive opportunity to build for the long term, and we are positioning ourselves well to continue to capitalize on it today and in the future. With 16 enterprise launches in Q3 alone, we are truly just getting started with our push into the enterprise commerce market. As we wrap up, let me circle back to how I started. Q3 was another standout quarter with 26% top-line growth and a 19% free cash flow margin. We continue to deliver some of the strongest results in the industry quarter after quarter. I truly believe this is the best version of Shopify yet. We are really pleased with our overall size and our shape, how we're operating, and especially our free cash flow profile, because it gives us the ability to grow the business and invest in the future. This is increasingly making Shopify the go-to commerce platform for merchants of all sizes. As our merchants gear up for the busiest shopping season of the year, they can be confident that Shopify has their back, equipped with the speed, reliability, and tools needed to capture every sale. We are not just running a platform. We are building a future where anyone can transform an idea into a thriving business. This is the vision and the reality of Shopify. And with that, let me turn the call over to Jeff.
Great. Thank you, Harley. We had another outstanding quarter. These consistent results, delivering both growth and profitability, demonstrate the durability of our business, our numerous growth drivers, and our ability to balance investing in the future with discipline, delivering double-digit free cash flow margin. Let's dive into our Q3 results. Starting with GMV. In Q3, GMV was up 24% year over year as we delivered our 5th consecutive quarter of GMV growth over 20%. The same 4 consistent GMV growth drivers that we have seen delivered again this quarter. Same-store sales growth from our existing merchants, led by our Plus merchants, growth in the number of merchants on our platform, continued strong growth internationally, with GMV outside North America growing 33% in Q3. European GMV grew greater than 35% as our largest markets of the UK, Germany, France, and the Netherlands continue to gain traction. The Netherlands was a notable source of strength, delivering year-over-year incremental GMV that outpaced France and was behind only the UK and Germany, and demonstrating the broad base of strength that we have in Europe. And fourth, offline, our point of sale, where we had 27% GMV growth year over year. In terms of industry verticals, Q3 saw notable growth from health and beauty, food and beverage, and apparel and accessories. Q3 revenue was $2.2 billion, up 26% year over year. Q3 is the 6th consecutive quarter of revenue growth greater than 25%, excluding logistics. The key drivers of revenue growth for the quarter were the GMV strength just discussed, growth in subscription solutions revenue stemming from the growth in the number of merchants on our platform, and to a lesser degree, the impact of the shortened paid trials and the Plus pricing changes, And third, increased payments penetration, which hit 62% for Q3. Stronger growth across the business, led by international GMV, drove our outperformance on revenue relative to our outlook. Q3 Merchant Solutions revenue increased 26% year over year, driven by the continued strength in GMV and the penetration of Shopify payments. These primary drivers were partially offset by lower non-cash revenue from strategic partnerships, which continues to be a headwind throughout the year. $43 billion of GMV was processed on Shopify payments in Q3, 31% higher than last year, and as a percentage of GMV was 62% compared to 58% in Q3 of 2023. Several factors drove the quarter's higher gross payments volume, including the strong performance of those merchants utilizing Shopify payments, an increasing percentage of which are Shopify Plus, more merchants across the globe adopting payments, and greater penetration of Shop Pay, which was 40% of GPV in the quarter. These items were partially offset by the continued strength of our business in Europe, which has a lower GPV penetration than North America. Subscription Solutions revenue was up 26% over Q3 of last year. The growth was primarily driven by an increase in the number of merchants on our platform and, to a lesser degree, higher variable platform fees and the benefit from the Plus pricing change. Q3 MRR was $175 million, up 28% year over year, with continued growth in each of Standard, Plus, and Point of Sale, with all three categories seeing an increase in the number of merchants. Plus represented 31% of MRR for the quarter, consistent with Q2. Q3 gross profit was $1.1 billion for the quarter, up 24% year over year. Our Q3 gross margin was 51.7%, compared to 52.6% in the prior year. Subscription Solutions gross margin was 82.3%, similar to Q3 last year. Gross margin for Merchant Solutions was 39.7%, compared to 41.0% in Q3 of 2023. The decrease was driven primarily by the same factors that have been impacting us all year. The largest impact was from lower non-cash revenues from certain partnerships that have now fully amortized. Payments was the other key driver, with two roughly equally sized impacts. First, payments constituted a larger percentage of our overall revenue in the quarter, given the strong growth in payments. And second, we had lower margins on payments this quarter as we saw pressure from both a higher mix of Plus merchants and a higher mix of credit card usage rather than debit card. These headwinds were partially offset by the growth in our other Merchant Solutions products, which have a higher gross margin rates than payments. Now turning to operating expenses. Q3 operating expenses were $835 million for the quarter, or 39% of revenues. Compared to the prior year, Q3 operating expenses were up $56 million, or 7%, well below our gross profit dollar growth rate of 24%. The largest drivers of our Q3 operating expenses compared to the prior year were higher compensation stemming from our biannual employee review process, which resulted in merit-based pay increases where appropriate. Each of the January 1 and July 1 compensation cycles this year were low single-digit percentage increases to overall compensation. We also hired some key roles within sales and R&D. Within transaction loans and losses, we had higher absolute dollar losses on both our capital loans and payments. But it's important to note that this was a function of volume increases for both of these businesses. The loss ratios remained within a consistent range. And finally, increases in marketing spend as we continued to invest in our core performance marketing, including higher affiliate partner payouts and continued investment to support our growing enterprise and point-of-sale businesses. Partially offsetting these, in terms of year-over-year comparability, was a $38 million real estate impairment expense in Q3 of last year. Our Q3 operating expenses came in lower than our outlook, primarily due to lower than expected marketing spend. The lower spend was primarily in non-performance marketing for enterprise and point of sale, and to a lesser degree, lower spend in brand advertising, where we don't spend much to begin with given the overall strength of our brand. Performance marketing also came in a little bit lower than planned, which was driven primarily by the decision to run some testing regarding point of sale. We remain firmly committed to carefully managing our investments and continue to operate within our guardrails. For the quarter, operating income was $283 million, or 13% of revenue, with operating income dollars more than doubling compared to Q3 of last year. Stock-based compensation was $115 million for the quarter. Q3 free cash flow was $421 million, or 19% of revenue, delivering an expansion of 300 basis points from Q3 of last year. This high teens free cash flow margin came in better than our expectations, largely due to a stronger GMV driving revenue combined with lower operating expenses. Let's now turn to our Q4 outlook. As a reminder, Q4 is seasonally our highest volume quarter of the year as it includes the key holiday selling period, including Black Friday, Cyber Monday. We expect Q4 to see similar seasonality trends to what we have seen in prior fourth quarters. First, on revenues. We expect Q4 revenues to grow year over year at a mid to high 20s% rate, driven by the same factors that have supported our strong revenue growth results so far this year. These include assumptions around the continued strength of our merchants' GMV. Q4 gross profit dollars are expected to grow year over year at a rate similar to Q3. As a reminder, consistent with prior years, Q4 sees a higher percentage of revenue from payments given the high volume holiday selling season. Turning to operating expenses. We expect our GAAP Q4 operating expenses to be 32 to 33% of revenues, representing a 300 to 400 basis point improvement compared to Q4 of last year. Compensation and marketing are the two largest increases in absolute dollars year over year, but importantly, both of these areas as a percentage of revenues are expected to be down year over year. We also expect higher dollar losses on payments, which is largely driven by sheer volume growth, not loss rates. Regarding compensation, we expect to keep headcount relatively flat year over year, but will have the impact of the merit-based pay increases that I discussed earlier in the call and some mix shift in terms of headcount per department. Worth reiterating again, though, that while we have a year-over-year dollar increase in OpEx, we expect a 300 to 400 basis points decrease in OpEx as a percentage of revenues, and we continue to grow gross profit dollars much faster than operating expenses. Moving to stock-based compensation. Q4 SBC is expected to be approximately $120 million. Finally, on free cash flow. We expect our Q4 free cash flow margin to be similar to our Q4 2023 margin of 21%. Which would result in us increasing both free cash flow margin and free cash flow dollars in each successive quarter throughout the year. Moreover, we have gone from negative 3% free cash flow margin in 2022 to 13% last year to being on track to deliver high teens for full year 2024 based on our Q4 outlook. We are proud of the consistent growth and margin expansion of our free cash flow throughout both 2023 and 2024. All done while delivering exceptional top-line growth at scale. These outcomes are a direct result of the work and disciplined decision-making we have put in place over the past couple years. The free cash flow margin profile that we have now achieved is one we like. It strikes the right balance between profitability and investing back into the business to continue to deliver top-line growth. Looking ahead, we aim to stay within a similar free cash flow margin profile, taking into account the typical yearly evolution of cash flow margins across quarters that we have seen in our business the past 2 years. One additional topic before closing. In the coming days, Shopify board member and Uber CFO Prashanth Mahendra-Rajah will step into the role of chair of the audit committee as part of a planned transition. Colleen Johnson, who has served on our board and as audit committee chair for over 5 years, will step down from the board. I want to thank Colleen for all the excellent service that she has provided Shopify and all the counsel that she has given me and the Shopify leadership team as a whole. Thank you very much, Colleen. I look forward to working with Prashanth more closely in his expanded role. In closing, it was an exceptional quarter. Shopify continues to power an increasing portion of the internet, serving as a system of record for millions of businesses. As entrepreneurship and commerce grow, Shopify is capturing an increasing share of this expanding market, becoming the go-to platform for all of commerce. Our success is not just in our scale, but also on how well we partner and work with other technology companies in order to give merchants a seamless way to run their businesses. Thank you to all of our merchants for your trust, and thank you to the Shopify team for all the hard work done long before this quarter began, making these results and what is next to come possible. With that, I'll now turn the call back over to Carrie for your questions.
We will now open the call for your questions. Please use the raise hand feature in Zoom to ask your question. If you are dialing in by phone, you will need to press *9 to join the queue and *6 to unmute yourself. We ask that you limit yourself to one question so we can try to get to as many questions as possible. Our first question comes from Brian Peterson at Raymond James.
Hi, thanks for taking the question and congrats on the really strong results. So I'd love to understand how the GMV came in relative to your expectations and any comments on linearity through the quarter and early thoughts on the fourth quarter. Thanks, guys.
Yeah, thanks for your question, Brian. I'm happy to talk through that. The GMV, and this is a little bit to some of the comments that both Harley and I had as it relates to some of the strength in Europe. That was the key element to the outperformance. And I made a brief comment about that in my comments in terms of the strength we're seeing. And it's pretty broad based. I made the comment about the Netherlands. So it's not just a lot of times in the past calls, I've talked about Germany, France, Italy, Spain. All of Europe is performing very well for us, and that's one of the key elements of GMV outperformance. We're obviously, and Harley and I both touch on this as well, we're seeing a lot of strength in Plus. We had all the success in B2B. It's really across a bunch of different fronts in addition to all the areas which have traditionally been core pockets of strength for us. It was, in terms of linearity throughout the quarter, it was especially towards the back half that we saw some strength in Europe. But that being said, as we think about the quarter overall and we think about the strength we see in Europe and the US, I don't have any specific trends to call out, just other than to say we feel really good about what we're doing right now with the merchants.
Thank you for your question. Our next question will come from Colin Sebastian at Baird.
Great, thanks. Really appreciate the opportunity here. You guys have positioned Shopify as the rebels going up against the larger online marketplaces, but arguably the consolidation of e-commerce market share is occurring to a smaller number of platforms, including Shopify. And so I wonder if your views of how the industry is evolving or changing, what that consolidation means for your merchant base, and ultimately how that influences product plans for things like Shop App. Thank you.
Hey, Colin. Harley here. I'll take that question. A couple of things are happening, I think, when it comes to larger brands and retailers. One is all across the board, they're looking for a unified commerce system. They're not looking for standalone single channel products anymore. I've used this metaphor before of the browser and the browser tabs. And what we're seeing is that these large companies, specifically complex ones that have high GMV, they want to collapse those tabs from 8 to 1. And this idea of having a modern, future-proofed retail operating system that is unified across every channel like Shopify is very compelling. Secondly, historically, when it came to larger brands, our focus was really on Shopify Plus. We had sort of this one size fits all for larger brands. But now we have an enterprise product, we have Shopify Plus, we have commerce components. And commerce components in particular is really compelling because I mentioned this in my prepared remarks, but we're now seeing brands that are calling us, and 3 weeks later, they now have Shop Pay installed on their checkout. Or brands, for example, like On Running, one of my favorite brands that has Shopify's checkout as a commerce component that they've now taken. So there are all these new sort of gateways into Shopify or on-ramps to Shopify on the enterprise side. The next thing I want to talk about is checkout. This idea that some of these large brands that are very sophisticated still don't have an optimized checkout like they would have on Shopify is becoming a competitive liability. And so that's also driving things quite a bit. And the fourth thing is total cost of ownership, TCO. The fact that we have this very transparent pricing with very large enterprise brands makes it that they understand exactly what they're getting. And when you sort of combine those things, I think you're seeing a lot of the consumers' favorite brands, especially the larger ones, come to Shopify, and they're coming at a faster clip, and they're coming in larger volumes. I think that'll continue to happen, especially now that our go-to-market engine has really ramped up. I think when you combine an incredible enterprise product with the right pricing that is unified and a very strong go-to-market energy and effort, you get these results.
Thank you for your question. Our next question will come from DJ Hines at Canaccord.
Hey, good morning, guys. Congrats on the great quarter. Harley, can you talk about what you're focused on from a product perspective to drive further B2B adoption, especially in the enterprise? I mean, you're obviously seeing nice momentum there, but is there any additional unlocks that you're focused on?
Yeah, there's a couple that have recently come out, and you're seeing us talk more about B2B around our additions, for example. I think particularly in Q3 alone, I think we shipped 3 or 4 new major features. I mean, things like product bundles supported in draft orders. There's now improved conversion tracking and tax collection. There's now new automation with Shopify Flow templates, which means that you can actually assign a sales staff to particular B2B customers if you're a merchant. And the result is that you're seeing companies like Dermalogica and Therabody and Life Fitness and Daily Harvest and Craft come to us as well. So I think we're closing those gaps fairly rapidly. I also think that, historically, we really focused on, existing direct-to-consumer brands on Shopify that also had a strong B2B or wholesale practice. That felt like sort of low-hanging fruit for us. We are now beginning to see merchants that are specifically and exclusively B2B wholesale merchants come to Shopify now for our B2B product. And eventually, in some cases, we've actually seen them begin to dip their toe in the water on going direct-to-consumer as well. So back to my comment earlier about this unified commerce system, the beauty of Shopify is that you come in for one particular channel, but once you're in the ecosystem, you begin to make that your, the entirety of your, retail operating system. But, specific on your point, those gaps are getting closed pretty quickly. And we just think B2B, it is a huge, I mean, there's like a $14 billion TAM. We're already seeing our B2B GMV doubled, since last year. We think that's a great opportunity, and we're able to close these feature gaps quite quickly.
Thanks, DJ. Our next question will come from Todd Copeland at CIBC.
Can you hear me okay? Yeah, thanks, and good morning, everyone. I wanted to talk about the impact of China with the U.S. election out of the way. Can you just talk about how much of your GMV, your estimation, is coming from China, and whether Trump tariffs will impact merchants? Is there anything you can do to help them? Thanks a lot.
Yeah, maybe I'll just sort of start. I mean, we've been operating now for over 2 decades across multiple administrations. We can anticipate what every presidential administration is going to do, but what we can do is arm our merchants and the people that use Shopify with the tools they need to compete in any environment. In COVID, for example, where everyone had to move online, we were there for them. In tough times, economic cycles, we're able to provide really transparent, competitive pricing. So our job is to support our merchants. Specific on China, it's not a huge area for Shopify. It has not been historically a big area for us. But again, back to our job is, no matter what comes the way of our merchants, we provide them with tools and service and support for them to navigate it really well. And I think we've proven to do that over the last 20 years.
Yeah, and Todd, the only other thing I'd add, there's nothing in what we've heard from Trump, nor would there have been anything from Kamala, which we think impacts the overall state of just new business formation and entrepreneurship. So we still feel really good about all the merchants out there, all the entrepreneurs that want to start new businesses, and that's obviously not going to change with the administration.
Thank you for your question. Our next question comes from Michael Morton at MoffettNathanson. Michael, you there?
Hey, sorry about that. I didn't click the unmute. Thank you for the question, Carrie. This for Harley. I know it's early days, but we're seeing some of the largest changes that have occurred in years to the search experience, right? AI overlays and even new search startups for the first time in decades. I'd love to know how you're thinking about the changing e-commerce experience, the funnel for consumers, and then what it could mean for the discovery experience of some of your e-commerce merchants as search changes.
Yeah, thank you for the question. It's a great question. Look, I think I talked a little bit on the call about how we're using AI internally, and frankly, support, engineering, sales, finance. Just about every department internally is using AI in some way to get more efficient, more productive. I have also talked about the fact that from a merchant perspective, we are trying to build tools and build AI across Shopify's entire product to make their jobs way easier. They can focus on what matters most. And I mentioned suggest replies in Shopify inbox, which may not seem like a big deal, but it's a huge deal because it means merchants can spend more of their time focused on the things that they need to be focused on, like building their products. But in terms of where consumers find merchants or find products, AI and search is going to change. But to be clear, this entire flow and discovery process has been changing for many years. It's the reason that you saw us integrate with, places like YouTube, or more recently Roblox, or TikTok or Instagram. We believe the future of commerce is happening everywhere. And in order for us to qualify and then re-qualify to be the most important partner in retail for the millions of stores on Shopify, Wherever consumers are looking for new products, we have to be there. And so I can't give any specifics on how we're working with some of those companies, but I will say that you can rest assured that when consumers shift their buying preferences, their discovery preferences, their search preferences, and they're looking for great products from great brands, Shopify will ensure that our merchants are able to do so. And that's the reason, even some of the more nuanced or some of the more, as you know, Shopify has an integration into Spotify. Why? Because some merchants that also have very large followings as a musician have massive followings on their artist profile. The fact that you can now show Shopify products on your artist profile means for that particular segment of merchants, they can easily, they now have a new surface area in which to conduct business. And that's the same thing when it comes to AI and search. So we've been really talking about Shopify being the central retail operating system where there may be 5 channels or 8 channels where commerce takes place. Over time, those channels are going to expand. Not every channel will work for every single merchant, but the idea is when a new channel exists, you're able to easily activate it directly from the Shopify admin. And that's the commitment we have to our merchants.
Thanks for your question. Our next question will come from Siti Panigrahi at Mizuho Securities.
Thanks for taking my question. I just want to dig into the enterprise part of the business, mainly go-to-market. I know that's a displacement market, and also you see, some of the big vendors in that space. Help us understand, how you are seeing, what's your strategy for go-to-market for the penetrate there, and what kind of trends are you seeing when enterprise customer uptake? Is it like total replacement? Or slowly they try to replace their existing solution?
In some cases, it's total replacement, which obviously is the goal. In other cases, they want to begin to work with us on checkout or on Shop Pay or one of the commerce components. But I would say that go-to-market execution is delivering across the board, and we have done a really great job of shifting this narrative that Shopify is no longer just for small businesses North America. We're now for every size business everywhere in the world. And when you have these incredible brands, these iconic brands, the Reeboks and the On Runnings and the Victoria's Secret of the world coming to us, it begins to create even further momentum. We're also curating a really important ecosystem where we're winning over competitors, partners, and in some cases, very large SIs. But we're also, we realize that in that world, garnering the top awards from IDC and Gartner is really important, which is what we're doing too. You're also seeing us increase our marketing efforts to support this go-to-market. So bringing the best sales teams with great marketing assets together has really been working. And I think the reason we're successful here is modern companies, modern brands need modern unified e-commerce architecture and commerce architecture. And I think the speed to market that we're able to provide to them, this commitment to unified, the volume of innovation. I mentioned this idea of a brand with over 40,000 SKUs, being able to migrate those 40,000 SKUs in less than 5 minutes. That is not something that most companies can do. In fact, that's not something that any company can do. And we're really innovating to try to make that a lot better. And we're displacing the largest enterprise commerce companies on the planet. And the momentum is continuing. And the best part is we're winning these deals. And they're not leaving. They're staying with us, and they're acting as references for other incredible brands too. So it's a really important part of our business. And now there's sort of something for everyone when it comes to enterprise commerce on Shopify.
Thank you for your question. Our next question will come from Andrew Boone at JMP Securities.
Thanks so much for taking my question. Jeff, I wanted to ask about one comment in guidance. You said similar free cash flow margins going forward. Can you just speak to the implications of that? And what are you guys either investing in or how do we think about that, as it seems like headcount has been flat? Thanks so much.
Yeah, I think in terms of my comments about similar cash flow margins going forward, one of the things I want to do just in terms of start from a perspective is look at both last year and this year and see how the free cash flow margins have played out throughout each of the quarters through the year. And you can see, again, to my comment about us getting to free cash flow margins in Q4 of this year, in expectation of where we were last year. I think we've gotten to a very good spot, especially over the last 2 years, where we've gotten to solid free cash flow profitability. And as I mentioned, as I mentioned on the call, I think we've now struck a very good balance in terms of where we say this feels like a good free cash flow margin where we can invest every incremental dollar back into the business and continuing to do everything we want to do to sustain the long-term growth of the business. So that doesn't in any way, shape, or form mean that we're not going to slow down everything we're trying to do to continue the leverage around how we use AI, around automation, around, as you alluded to, Andrew, in terms of the disciplined headcount. We talked at Investor Day, but I guess it's a little bit less than a year ago now. We talked at Investor Day about our internal proprietary systems, GSD, Shopify OS, some of the things that we built to make ourselves more efficient, really point the team in the right direction, be highly effective in everything we're doing. So we're going to continue to do all of that. But we also see the opportunity right now, and both Harley and I alluded to this in our comments, we also see the opportunity to really make sure the incremental dollar goes back into top line growth and supporting that momentum. And all the things that we've talked about, the durable elements of growth for us in terms of what we're doing in point of sale, what we're doing in enterprise, what we're doing in international. So it's really that element of not trying to aggressively push free cash flow margins higher and instead focus on the continued growth of the business. So that's really the best context I can give you, Andrew.
Thanks, Andrew. Our next question comes from Mark Zugotowicz at Benchmark.
Thanks, Carrie. Appreciate it. Jeff, you've alluded to the last quarter or two, just in terms of your enterprise pipeline starting to contribute perhaps in the first half of next year. Just curious if you could maybe quantify or qualify the size of that contribution in the first half next year. Thanks.
Yeah, Mark, I don't have any real numbers to give you or to say this is how we think about the incremental to top line growth. I would echo some of the comments which Harley made just a few moments ago in terms of what we're seeing on enterprise and go to market and how that's playing out. Obviously, we've been lending some marketing dollars to support enterprise, and that's helping fuel the momentum in addition to all the other things we covered. I would say, and we've talked about this a little bit in terms of just the overall selling cycle and then the implementation cycle. On average, as you know well from following things in the enterprise space, it can take 6, 9, 12 months sometimes in order to get through the selling cycle. Sometimes it can take an equal amount of time in terms of implementation, not because our technology can't go much faster. And we've had some instances, and Harley talked about a couple of those on the last call, in terms of how we can get these implementations up and running very quickly. But on average, if you say it's 6, 9, 12 months in the selling cycle, 6, 9, 12 months in the implementation cycle, you kind of stack those two on top of each other and say, we've really been making a push on enterprise, I don't know, roughly 2 years now. And we're kind of 18 months, or if you kind of 9 months and 9 months and stack on top of each other, we're kind of 18 months into really having a lot of these enterprises on platform, taking volume, really working with us. I think we're still very early in the days of this, Mark. So this is going to be more of a 2025 phenomenon than it is 2024. I just don't have any exact numbers to give you and say it's going to add X number of basis points, for example, to next year's growth rate.
Thank you for your question. Our next question comes from Martin Toner at ATB Capital Markets. Oh, sorry. Looks like Martin dropped out of the queue. All right. We'll take our next question instead from Ken Wong at Oppenheimer.
Fantastic. Thank you for taking my question. I wanted to ask about your enhancements with PayPal announced back in September. I guess one, kind of how does this kind of progress the platform? Any potential uplift to monetization or unit economics over time that we should anticipate?
Let me just sort of start before we get into unit economics, sort of the why we did it, because it's important. I mean, for us, it's all about optionality. We want to effectively, I mentioned those browser tabs. We want to make it really easy for our merchants to conduct all their business. So, for example, after this integration, now all your PayPal wallet transactions, you can be seen directly from the Shopify admin. So when we think about these partnerships, what you should sort of think about is what we're trying to do is make it so merchants can operate more effectively, easier with things they're already using. And that's the reason why sort of this made a lot of sense. Optionality really matters to them. I can take the economics one as well. I mean, for Shopify, the biggest change is really just going to be around the PayPal wallet transactions, which are moving to, it'll be gross revenue recognition at a sort of premium to typical card transactions on Shopify payments. Jeff, I'm not sure if you want to add anything else to that.
Yeah, and that's a function of just the level of integration we did with PayPal on these wallet transactions. And so this really specifically goes into make sure we're differentiating between situations where we would process with PayPal on the back end. This specific situation that Harley and I are alluding to is if a consumer chooses to effectively use their PayPal wallet, use the PayPal button to pay, then given the integration that we've done, which we really did for the sake of being able to give the merchants a more holistic view of all these transactions. So from their Shopify admin, from the dashboard that they're using to run their business, they have a comprehensive view of all the transactions in terms of the orders, the payouts, the reporting, the chargebacks, all of those things. One of the outcomes of that is the revenue recognition change on those specific types of transactions, which Harley alluded to. So we're going from what in the past had been a net revenue recognition on those, it's now going to gross. The gross revenue recognition. Importantly, though, so while there's going to be some headwinds to margins on that, some uplift for revenues in terms of growth rate, it's on a gross profit dollars, it's incremental gross profit dollars to us. But that will, and we signed that agreement at this PayPal wallet transaction activity went into effect at the very end of September. So this will be a little bit more of a 2025 phenomenon.
Our next question will come from Trevor Young at Barclays.
Great. Thanks for taking my question. Jeff, just back to your comments about feeling comfortable at this kind of, high teens, 20% free cash flow margin. Help us foot that with, comments earlier in the year about, further room to run on optimizing your internal facing marketing tools and adjusting spend across channels to maximize ROI and so forth. Should we assume that, you might lean in on marketing heading into next year?
Well, Trevor, there's no change in how we think about marketing, and I don't think that there's any change in terms of how we think about free cash flow. From a marketing perspective, we obviously have spent more time on that topic in the prior two calls, but our strategy remains focused on everything we can do on both the performance marketing and the non-performance marketing in terms of, one, supporting the core Shopify growth engines, and two, obviously helping expand in things like point of sale, enterprise, B2B, et cetera. So there's nothing that's changed from a marketing vantage point, nothing changed in terms of our payback guardrails. I think on the free cash flow, part of the reason, obviously, there's a few reasons. One of the reasons why we can get to these free cash flow margins, and I alluded to it before, is everything we're doing around discipline, headcount, around AI, automation, our internal systems. So we're going to continue to leverage those. We're going to continue to be more and more efficient in terms of our internal operations. I don't think that impacts how we think about marketing. And I don't think that in any way impacts saying, well, all right, so now we've quote topped out on free cash flow margins, which is not clear. Which is not the case. We're making a proactive decision in terms of how we think about these margins, so we can invest those dollars, whether it be back in marketing, whether it be upgrading in certain spots, maybe the R&D team, maybe adding to the R&D team, product development, AI, all those things. It's not a marketing specific initiative to say, oh, this gives us the additional dollars to go pump that back into marketing. So.
Thank you for your question. Our next question will come from Dominic Ball at Redburn Atlantic.
Hey, Jeff, Harley, and Carrie. Thanks for the question. One question on the changing nature of search discovery and the evolution of short form content. So can you give us a little bit more color on the Shopify YouTube Shorts integration? How this came about, the merchant uptake, and how big you think this can really get? Thank you.
Yep. When it comes to YouTube, this isn't a new partnership for us. We've been working with YouTube and Google for a very, very long time. The relationship with YouTube actually started with live selling. We were their live selling launch partner originally. And then what we realized, or what we realized in collaboration with them, is that this idea of actually creating an affiliate program whereby if one of their content creators is talking about doing a cooking show, for example, and also wants to use a particular product that eventually becomes for sale, pretty much every one of the brands that the audience likes and wants to purchase from is on Shopify. So it felt like a really great thing for them because it allows their creators to further monetize through affiliate fees, but it also means that Shopify merchants can now find a new sales channel through these creators across the YouTube the YouTube audience, which we think is obviously always positive. But at a macro level, these, whether it's YouTube or also, I mentioned Roblox in my prepared remarks, or any of these other channels, the idea here is to make sure that every surface area where consumers may want to purchase, they're able to do so through Shopify. And so you'll continue to see us do more of those things. In terms of how YouTube in particular is going to fare, that remains to be seen. It's still pretty early. What I suspect will happen, similar to our other channels, is that some merchants will find a lot of success there because they'll find that their audience, their core audience, works really well with this particular affiliate dynamic. In other cases, it may just not be that helpful. But that's the point. The point is that we want to effectively make it so every merchant on Shopify can get in front of a new audience that otherwise they may not. And again, in order to do that, you have to be on Shopify. And so you'll continue to see us do more of these commerce integrations and these partnerships. And actually, one thing I'll just sort of mention this. One thing that Shopify's got really good at is we have a great reputation of being a great partner. And what that means is not just technology, not just commercials, but more sort of holistically. It means that when a company of any size or in any industry is thinking about commerce, Shopify is usually the first call they make, and the integration doesn't take months or years. It often happens quite rapidly. And so I'm very proud of Shopify showing up as a great partnership company.
Thank you for your question. Our next question will come from Deepak Mathivanan at Cantor Fitzgerald.
Hey, thanks, Carrie. Thanks for taking the question. Harley, can you give additional color on what you're seeing in terms of the consumer behavior or repeat use after all the recent product enhancements you made on the Shop app? How should we think about what informs your product strategy for this going forward, say in the next 2 to 3 years? Thank you so much.
Yeah, I mean, the product strategy remains the same, which is we want to create new ways for merchants to engage and to drive authentic connection with customers. We also want to make it that Shop is an owned channel for merchants that can help them drive real traffic and real sales. And these enhancements are working. I mean, Shop is becoming this sort of cultural force. We're seeing incredible brands, Drake, Mr. Beast, Steve Madden, Feastable, Spanx, all come to Shop to do these incredible, not just promotions, but also they're launching things directly on Shop. We also think search and AI together makes the Shop search way more relevant, way more personalized. That is also very compelling. And then merchant co-marketing, teaming up with these big brands to do these Shop cash giveaways has become really important for some merchants. Some of the time, it's one of the major drivers for them. So in terms of where it's going, I mean, in terms of our goal here, the changes that we've made in some cases have led to an 18% increase in sessions where a buyer engaged in a recommendation with our new home feed, for example. So I think you'll continue to see new improvements to the Shop app, but ultimately the idea is, can we actually help increase LTV for the merchants who use it? Can we help consumers find brands they have not otherwise encountered, and also re-engage with brands they already love? And to my point earlier, the key here is that this is something that if you want to engage with, if you want to be a part of, you have to be on Shopify, and Shop app continues to do really well.
Thank you for your question, Deepak. And our final question will come from Richard Su at National Bank Financial.
Yes, thank you. You talked about Shopify being a system of record for commerce. So as we look out ahead, is it fair to say that you have an opportunity beyond commerce, so to replace existing systems of record such as ERP, CRM, or supply chain?
In the case of ERP and CRM, we actually feel really good about connecting with the best ones. And so a lot of these large enterprise brands that are coming to us, they come with an ERP system already integrated across their company, in some cases a great CRM as well, and we make it really easy to integrate. So ERP and CRM is not something that we focus on. We are a commerce company. We care about retail. However, it is critical that the changes we've made over the last couple of years to easily connect your existing systems into Shopify, again, back to the ERP systems, CRM and others, are able to function seamlessly when you come to Shopify. We've made that really easy. But we're a commerce company, and I mentioned in previous calls, we actually have a very focused, we're focused on our main quest. We don't like these sort of side quest distractions. So our view is that make it really easy to bring the ERP system you prefer, and integrate it to Shopify. But that's not an area that we're going to go into.
Thanks for your question. I'll now hand it back to Harley for some closing remarks.
Yeah, thanks, Carrie. Look, you've heard a lot from Jeff and I on the call, but just want to say this. For those of you that have been following the Shopify story for quite some time, you know that we are a company that is laser focused on our merchants. You've heard that we have a very long-term vision that we think could help them succeed. I think you will continue to see us seize opportunities and invest, as Jeff describes, with discipline to further establish ourselves as the leader in commerce. And this has enabled us to deliver, as you can see from these results, some of the strongest results in the industry quarter after quarter. I also want to repeat, this is the best version of Shopify yet. We really like our size, our shape. We like how we're operating. We really think it gives us the ability to grow the business and invest in the future. And so I just want to finish with that point. And now for us, back to helping our merchants crush it this holiday season and well into the future. So thank you all for joining us on this call.
This concludes our third quarter 2024 conference call. Thank you for joining us. Goodbye.
We review it actually twice a week.
Okay, everybody on Extra.
I feel real good
the call
about
has ended.
that. And we
I will
see
end the stream. Join me here
growth
on the main
of
channel
20%
for
to
Plug.
30% next year, which Jose and there really isn't an alternative. They move goods more rapidly.